Okay, it is Sunday, July 6th. It's about quarter after 11 in the morning, New York City time. Going to redo the video I did yesterday on backtesting and the fixed bar method. Not going to go through the chart the way I did yesterday, but I am going to hit the relevant points to make the point I was trying to make. And the reason that video was deleted was that, unbeknownst to me, the audio quality was absolutely terrible. I think I got things fixed now, so let's get to it. So first thing I want to cover is this. We are trading in the Pricebob thread what's known as fixed bar methods. We are each looking to compose or build a fixed bar trading plan that fits each and every one of us as individuals. That's going to differ for most of us. You can trade any instrument you like, any time interval, bar interval, duration that you would like, 5 minutes, 60 minutes, 1 minute, 1 day, whatever you wish. You want to trade gold, trade gold. You want to trade the euro, Dow futures, NASDAQ futures, S&P 500 futures, DAX futures, Nikkei futures, anything you want. I'm going to change this right down here. I see a typo that's going to bother me. I'm not going to try to waste too much time. One typos. But that one was going to bother me. Anyhow, that's what we're doing. And a fixed bar trading plan is one in which trade direction, entry trigger, risk, and take profit all are derived from the range of a time-defined reference bar. For example, the MeBob trading plan that I introduced at the beginning of the Pricebob thread uses the specific 5-minute bar that opens at 10:05 a.m. New York City time, closes 5 minutes later at 10:10 a.m. New York City time. That is the reference bar every day. The MeBob bar is not open to interpretation. If you think you are trading a MeBob-like method, but your reference bar floats throughout your trading window from day to day, you are not trading a fixed bar, MeBob-like trading plan. If you are trading a method where the time of the bar you use as your reference bar, again, not going to fix all the typos, changes from session to session, you are not trading a fixed bar method. That's fine. But you're trading momentum or support and resistance or something else entirely. But you are not trading a fixed bar method as such terminology is understood in this thread and indeed around the trading world. For example, opening range breakout methods are a form of a fixed bar method. The time that one uses to define the opening range for his or her trading plan isn't going to be from 9:30 a.m. to 9:45 a.m. New York City time one day, but then the next day, it's 10:15 a.m. to 10:30 a.m. If the bar you're using to set your trade direction, entry trigger, risk, take profit, etc., is not at the same time every day, you are not trading a MeBob-like plan. It's the very nature of the fixed bar approach, this fixed time interval, that makes this type of trading plan so well suited for the completion of Mark Douglas's 20 trade exercise. It allows the trader to eliminate completely any remaining remnants of discretion in the execution of his or her trading plan. And it just happened that today posted to the Pricebob thread, Belgrade really gives a shining example of exactly what I've been talking about, what Blue Steel's been talking about, what Turnip's been talking about in the thread. We are trying to focus everyone's attention on the importance of rules, non-discretionary execution of a non-discretionary trading plan. So here, I copied one of Belgrade's, this might be his first post to the thread, all the way back in May. So today's July 6th. Isn't it the 6th? It's July 6th. So May 25th. I did that. I just started reading this thread this past week. I really like what I'm reading. I have listened to your video about the 20-day challenge of trading the MeBob bar. I'm going to start trading on Tuesday, and I will use the high-low of the MeBob bar for the stop loss and 10 points for the take profit. I will let you know how it goes. I have been a struggling trader for a while now. Haven't we all, Belgrade? Haven't we all? So I am hoping this really helps me. I haven't caught up to the end of the thread yet, but that is the plan this week, besides trading the 20 days. Keep up the good work. Well, I'll tell you, the good work was really the work put in by Belgrade, because 13 hours ago, so I thought he had posted it today, but it was actually yesterday, he posted that I hit my 20 trades this week, actually 24 total, and made a profit. I will be starting my next 20 next week. I know I made a profit of 31. I'm assuming that's 31 points, S&P points. But it looks like if I trail my trades, I could do even better. I would have made an extra 45 points. It is a simple trail that has rules. Thanks again, Big Bad, for this wonderful thread. You've made a difference for sure. Again, you're the one doing the work, Belgrade. And nothing I put into this thread originates with me. This is really an idea that was generated by coming across the MeBob method again. And I don't even know if I came across it. I seem to think maybe Blue Steel pointed it out to me, or maybe I came across it by accident. I don't know. Actually, I think Blue Steel may have mentioned the Avid Trader website, and that got me thinking back. I can't remember exactly, but the point is, I did not come up with MeBob. I certainly didn't come up with the idea of a 20-trade non-discretionary exercise. That's all Mark Douglas. But again, this is why all this BS I keep seeing coming into the thread about backtesting and people who want to put algos to work and expert advisors and automate, it's all BS as far as we're concerned. We are point-and-click traders. We do not program. We are not looking to automate. We're looking for a simple trading plan that can allow us to be consistently profitable traders so we can all finally generate a consistent income from the market that we can rely on. And again, that is all Mark Douglas's words, right? If you are familiar with Mark Douglas's videos and his books, that's straight Mark Douglas. So that's what we're looking to do. So what I did yesterday was I had started a spreadsheet, and this is what it looked like at the end. I did a trading plan where I put in the date. It was for 20 trading days. So the the 19th of May through the 16th of June. I recorded when a full stop was hit prior to at least my first take profit. And then I recorded my first take profit, which would be the 61.8 extension of the range of my reference bar. And I also recorded whenever price reached the 100% extension of the range of my reference bar before going back and hitting what the stop loss would have been. And the results are here. over, and I had two exclusions. I had a range expansion exclusion, and I had a pivot rule exclusion. I also have a 7 a.m. manual exit. I did not change that. But these were my results from that back test. And this is all I do for a back test. I have my rules, and I no longer have the chart in which I wrote the trading plan out, but I had my trading plan in writing, my exclusions in writing. These are the results. I make notes on each trade where, for example, here, there was no trade because of the range expansion exclusion. But I did note that had I taken that trade, it would have had a profit of 14.5 points. So then, after I do this, this is a profitable back test. If 19.9 points is $1,990. I would subtract about 10% from that, so it'd be around $1,790 net profit after fees, slippage, accounting for the fact that in my back test, there's usually about 3 ticks of unaccounted for slippage. So in other words, the results tend to be better by 3 ticks than they would actually have been. So either of these are profitable. But when I looked at my notes, I realized that these rules, which I carried over from the work I've done on trading the NASDAQ and the S&P 500 futures, seemed to hurt the results when trading gold. So this is gold. So then what I could very easily was able to do, without doing a whole new visual back test, is recreate that spreadsheet. So this is the same back test, version 2, 1.2. And all I did here was I inserted the profits. I did have to go back on a few. So here I recorded that this was the 100%, but I didn't note that. So I had to go back and check those. But very quickly, and now if I remove my exclusions and take every trade just based on my reference bar during that same period, the net profit, this would actually still be gross profit. Gross profit would be 52.4 points. Again, I would subtract about 10 to even 15% of that. I can very quickly see that taking the less favorable risk reward, taking my profit at the 61.8 is more profitable than holding for a 1-to-1 risk reward. This would be trading a full-size gold contract. This would be a profit of $5,240 over 20 days. So, but let's subtract 15%, which is more than will account for any slippage, fees, commissions, and errors, favorable errors in favor of the back test. So $5,240 minus 15% would be 4,454. Here we go. So you can see it. 5,240, 15% is 786. So the net would be around $4,400. Let's say $4,400. That's in 20 days, about a month. That's one futures contract. Do that for a month, which is what I would do now. What I actually would do now if I were interested in pursuing this, which I'm not, because this would require me to get up at 2 in the morning or 3 in the morning to place orders and start managing trades. But this would be a trading plan that I would be interested in. I would finish the data up through Friday of this week to give me a full test back from the 19th of May. If the results are still acceptable, then I would start forward testing in a live market. I tend to forward test with a live money account. I would use real money, real trades, real losses. Others would forward test in a sim account. That is perfectly acceptable, absolutely fine. Actually, what I would probably do is I would start up a prop account with some firm, Top Step or Trade Day most likely, and dedicate that evaluation account to forward testing this plan. Because 20 more days, guess what? That's how long you have before you get rebuild. So for example, I think it's $49 for a $50,000 account with Top Step. Now, you might end up blowing that account. You get a couple losses in a row, you could easily blow to $2,000, and then you got to pay $49 to reset the account. Or you could pay more. I don't know. Maybe you need a $5,000 drawdown, but now you're paying a lot of money up front for the account. I'd rather pay $49 and take my chances and do a reset if necessary. But that's all the back testing I do. I don't need Monte Carlo simulations, martingale simulations. I don't need all kinds of weird charts, because here's the thing. Your back test is only going to be as good as your ability to program what you're doing, first of all. And second of all, it's not going to help you and your psychology and managing your emotions and managing your discipline. We had a guy come to the thread a few weeks ago, really giving me a hard time about back testing and why am I opposed to what he was doing. And I said, I'm not opposed. You can go and start your own thread. You can test whatever you want. Now, you want to test what we're doing? Fine. But do it in your thread, because what you are doing is at cross purposes to what we are doing. So this is what, in my opinion, all you need for a back test. This is an Excel spreadsheet. You need the date of the trade, record your full stop, record does it reach your profit targets. I will sometimes also add columns for max favorable excursion, MFE, or max adverse excursion, MAE. Max favorable would be, I would record the highest or the farthest price went in favor of my trade before reversing and hitting my stop. And I would also record, after the trade was initiated, the max adverse excursion. How much heat did I take? Did my buy stop, for example, get filled and then went 6 points against me before going 7.2 and then 11.7 points in my favor? I will sometimes record those. But in the end, all I really need is to record the date, my stop amount if it stopped out, the profit targets, were they achieved. Then these are simple formulas. This is just a sum of these profits. This is a sum of these profits. This is the sum of any of the losses. And then this is simply the sum of the losses and the 61.8 profits. This is the sum of these losses and the profits from the 100% targets. And that's it. This is all you need to do. But you should do it. If you don't have Microsoft Excel, I think Google Sheets are free. I don't know why I continue to pay Microsoft for this year after year. Probably have it. But that's all I do. And I have hundreds of spreadsheets from over the years. They're only now really starting to do me any good because honestly, my most consistent success has now been found using fixed bar trading methods. So I'm going to to move these out. Move this out. Congrats again to Belgroth. I really appreciate your participation in the thread, and I appreciate your commitment to the process. And then we have here, so this was all I was doing. The pivot exclusion, of course, referred to these lines you see in the chart. Previous day, high, low, and close. Today's opening price, high and low for last week. The range expansion exclusion had to do with a ATR calculation. I'm not going to explain it again. I did it yesterday, but it's really irrelevant. It's something, I put those in because I find them useful trading the NQ and the S&P 500. But at least for this back test, they were not at all useful. In fact, they damaged the results significantly for gold. But that's all you need to do, people. Don't make this more difficult than it has to be. Commit to the fixed bar method if you're in this thread, or not. But if you're not going to commit to it, then there's no reason for you to participate, and that's fine. Everyone here knows that, man, I loved Rocky Point. He had his thread. I was there for a long time. I worked on his method for a long time. Miss him dearly. Still can't believe that he's passed. But I know he would never participate in the Pricebob thread. And he wouldn't criticize me. He might come in and say, hey, great thread, or support. But he's not going to come in and try to change my mind or your mind. So anyone listening to this, if there's something you see in the thread that you disagree with and you want us to do it differently, go start a thread and explore that difference. But don't come to our thread and ask us to change to make you happy, because we're really working on becoming consistently profitable point-and-click traders who can generate a consistent income from the market that we can rely on. And it's working. It's a process that works. It's a process that Mark Douglas introduced to the world 30 years ago, I believe, in his first book, back in the 90s, The Disciplined Trader. And it's a process that many of us have been aware of for 5, 10, 15, 20 years and never were able to do it right. So here we are. We're doing it right. Is backtesting important? Certainly. Even Mark Douglas would say, hey, do a 20 trade exercise. But he would always preface it by saying, if you have a method that you know should have an edge. So that's the purpose of backtesting. You do your back test. Does it have an edge? Great. Now you do your forward test. Do your forward test. At the end of the forward test, do you have an edge? Yes? Great. No? Back to the drawing board. If it has an edge, are you happy with the results? No? Well, what one variable, and only change one variable each time, what one variable might you be able to change that could make your results better? So for Belgroth, for example, he has indicated that he believes that by switching from a fixed take profit to a trailing stop, he would significantly increase his edge. So he's going to start a 20 trade exercise using a new stop method, which is exactly what he should do. That's the purpose of the notes column in a back test. By keeping these notes, I was able very quickly, easily, without any thinking at all hardly, to see, these exclusions that typically protect me when trading a U.S. stock index on certain time fixed bar plans actually hurt me when trading gold at this particular time of day. So that's all you have to do. Anyway, I appreciate you all, but I do ask that we stick to fixed bar methods. Stop posting to the thread your results if you're trading anything but a fixed bar method. Nobody effing cares. We really don't. The only one who cares is you. If you're insisting on posting, hey, look at my great trade today, and then you try to justify posting it by saying it's a me-bob trade, or it's a opening range break, but has nothing to do with the opening range, don't post it. We don't care. No one cares. No one. I don't. I care a whole lot, though, about this type of posts and the work that Batavia and Giga and others are doing in the thread. Because those activities are what's going to change lives. We can change lives in this little Forex Factory thread. We're not here to boost anyone's ego. Quite the contrary. We are here to learn to tame our own egos and separate our awareness and consciousness as an individual human being from that part of us that we call ego, that insists on always being right, always looking for attention, always screaming, me, 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 look how great I am. We're the anti-ego thread. If you are an ego person, an ego-driven person, we're not for you unless you're looking to change. And that's it. We're a fixed bar method trading thread. Congrats to everyone who's following the process. Belgroth, congrats to you. I thank everyone, again, Blue Steel, Turnip, Giga, Belgroth, Batavia, too many. I know I'm skipping people and I apologize. But hey, let's stick to the plan, stick to the fixed bar methods. You can choose any fixed bar you want. You can choose any money management scheme you want, but make sure there is no discretion involved. If you do have any exclusionary rules, they must be completely objective, easily identified, and leave nothing to question or chance. And that's it. So I thank you for listening. I'm hoping the audio on this was better. Take care. Enjoy the rest of the weekend. See you guys back on Monday.